Today, I'm going to talk about the IRS Form W-4 for 2019 if you're single with one kid. And I'm going to point out something to make sure that you're paying the least in taxes. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name's Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. Okay, so I want to make sure if you're single with one kid that you're reducing your taxes as much as possible and you don't make this small mistake. So I'm going to pull it up on the screen. I'm going to put the link to the W-4 calculator in the description at the bottom so you can follow along. So here we go. So this is the 2019 withholdings calculator. Again, I'm going to flash up on the screen what the URL is so you can follow along with me. If we click on single, we say we have no one else can claim this as a dependent. We want to check off, can someone else claim this as a dependent? The answer is going to be no. And if it's yes, you should stop right here because this video is not for you. Click on no, click continue. Now the next part is going to be filling out how many jobs you have. So if you have one job, go ahead and check that off. The next section is if you held a job and this is a new job for you, then go ahead and check that off. That is that first radio button. And you're going to also need your pay stub if that's the case. But if it's not, and this is your only job that you've had this year, then just move on. Don't check it off. And the next box is if you contribute to a tax-deferred retirement plan, such as a 401k or another retirement plan, such as a SEP or a Simple, anything along those lines, if it's pre-tax, meaning tax deferred. So if it's pre-tax, you want to go ahead and check that off. If you contribute to a cafeteria plan or other pre-tax plan, such as a health insurance plan for the year, again, you want to check that off because why? That's going to lower your taxable income. The last radio button that you have is if you received a scholarship or a fellowship grant that should be included in income, that's obviously going to increase your taxable income. You also want to make sure that you check that off so this is as accurate as possible. Now, the next section, really important for a single with one child, and that is how many dependents do you have? Now, that child is going to be your dependent, so we're going to go ahead and check it off, and we're going to put a 1. Now, if you're wondering whether or not it's the dependent, I can put the link in the description at the bottom on whether or not that is a qualifying dependent. But if it is, and it is your child, and you're the only guardian, then put a 1. Now, the next section is very important if you do have a child and they're your dependent. So you want to make sure you get this right. If you do have child or dependent care costs, you want to put them in. So if that's the case, you want to say that you have one child because we have one child. So we're going to put a 1 there. And then you want to put what that is. Now, that's only going to go up to $3,000, but you want to make sure you put the number in there so it can account for that and help you reduce your taxable income. Now, the next part is just as important. I'm going to flip this back to 0 since we're not going to have any child or dependent care expenses. But we do want to look at the child's tax credit. We're going to go ahead and put a 1 there. The next section, earned income credit, we're going to put a 1 there too. If you don't end up qualifying for the credits, it is okay to still put a 1 because the calculator will figure that out for you. But it does want to know that it is in fact a dependent child. So that's why we're going to put the 1 there. If you have other credits, check out some of my other videos. The biggest one is going to be the Savers credit, but I'm just going to point out, and it's a Savers credit right there, retirement savings contribution credit. That's the Savers credit. If any of these other credits do meet those criteria, figure out what those credits are so you can put them in. Credits are going to reduce your tax liability, which is even better than reducing your taxable income. So you want to make sure that if you do qualify that you do fill that out. Let's go ahead and click continue. So let's assume that we're going to make $30,000 and we're not going to get any bonuses. We haven't withheld anything year to date. And we don't have any federal income taxes. Now, in these 2 boxes right here, you want to look at your pay stub. If you don't have a pay stub, if this is a new job, just put 0s. But if you do have a pay stub, go to your pay stub. It's going to tell you how much was already withheld. So again, it's going to make that adjustment for you if you put the correct numbers. The next section is how frequently you're getting paid, whether it's weekly, every 2 weeks, twice a month, monthly. We're going to put twice a month. Now, if you don't know, if you're confused, every 2 weeks, that's going to be 26 pay periods for the year. If you get paid twice a month, that is going to be 24 for the year. If you have specific dates that you get paid on, such as the 1st or the 15th, then twice a month is going to be what you're going to check off. Let's continue. Let's scroll down to the bottom. The next section, non-wage income, pretty self-explanatory. I'm not going to go through it in this video. The next one is going to be adjustments. And now this is specifically referring to a traditional IRA. In 2019, you can reduce your overall tax liability by contributing to a traditional IRA, also known as a deductible IRA. And that would go right there if you want to contribute to an IRA. If not, leave it blank or put a 0. Click continue. If you don't have itemized expenses greater than $12,200, then you're going to take what's called the standard deduction, and it's going to give you a deduction of $12,200. Pretty nice. So we're going to leave this page as is because that is the default, the standard deduction. You can see it right up there on the first line, and we're going to click continue. Now this page is going to tell you exactly what to put on the paper version of the W-4. So you can see right there, it says the word exempt. So that's what we're going to write on line 7 of the W-4. And you see that they give you a link for the W-4 form. So we'll scroll down to this section, the only section that you're going to give to your employer. Fill out all your basic information. But in line 7, all you're going to write is the word exempt. So you need to fill out all of these sections, but it's just your basic information. For sections 5 and 6, you can just leave them blank because in section 7, you're writing the word exempt, so no taxes are going to be withheld. Now, I do want to point out that if you go back to this page and we fill that out again, make sure everything is correct. But if we go back to this page and you look at the child, we want to have the dependents as 1 and the child tax credit. Let's say we miss that and we still make $30,000. Let's see what happens. So we put up here that we did have a dependent, but we forgot to mark off that we had a child tax credit. Let's see what happens. Let's click continue. Put in the same number of $30,000. Put in 0, 0, 0. And then we're going to go ahead and put twice a month. So everything is basically the same. And we're going to click continue and continue. Now our answer is completely different. Now it's saying we have a tax liability of $1,445 and that we should put over right here 2 allowances on the W-4. So that's going to be 2 allowances if we didn't have a dependent child that we checked off on. Why is that? Because each child that you have is going to be a credit, a tax credit of $2,000. Now, previously that was $1,000, but now it's $2,000. So that's a huge, huge deal in regards to your taxes. It brings us from a tax liability of $1,445 and completely annihilates the taxes down to 0. So you want to make sure that you fill out the W-4 correctly, and that is probably the biggest mistake that you can make if you do have one dependent child. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.